In today's video, I'm going to be showing you how to trade the Asian session liquidity mixed with the order block strategy. So it's going to be a combined strategy mixing the liquidity during the Asian session and order blocks. If you're not subscribed to the channel, consider subscribing. I try to post videos like this on how to trade with the market maker, how to trade smart money concepts here on this channel. So let's get into the video. Trading the Asian session liquidity with order blocks, there are specific things you're going to be looking for, right? So if you have knowledge on the Asian session liquidity, you know that during the Asian session, which will be looked at as a box like this during Asian session, it lasts for about 8 hours. Now, during the Asian session, you usually have consolidation, right? If you don't know how the Asian session liquidity works, check out the video on the top right corner of your screen. But for those who know how the Asian session liquidity works, so you have this liquidity here, right, at the top and at the bottom of the Asian range because of the consolidation, because the people are selling at resistance and buying at support, right? And then you usually have a stop hunt to take out liquidity, right? Let's say, for example, they take the liquidity in the upside, right? So there's liquidity down here, so you expect them to come back down here to take out the downside liquidity, right? So now what you're going to be doing is, after they've taken liquidity, is you're going to be looking for an order block to form up in here, right? So in simple terms, you're going to be looking for an order block here like this, and then you're going to expect price to go back to that order block and then continue down, right, in line with the trend, always in line with the trend. Now there's a pattern you're going to be looking for at these highs, right? When they take out the liquidity, there's a pattern you're going to be looking for, right? And it's called the Quasimodo pattern, where you have like an uptrend, for example, and then you have a stop hunt. And then you know these are higher lows, and higher lows, right? While higher highs, that's an uptrend, right? And then what then happens is you have these stop hunts, right? And they come back inside the structure, and then they break structure, right? Once you get this break of structure here, you're going to be looking for the market to come back to the last up candle for the order block, to come back into this zone, for example, and then continue down like this, right? So also inversely, if you have a downtrend like this, you're going to look for them to take out liquidity and break structure, which they just broke like this, and then you're going to draw your order block zone, and then you're going to wait for the market to come back to that zone and then reverse from there, right? So there are two ways you can enter this. You can either enter this with a limit order, or you can enter this with a market execution order with candlesticks confirmation and stuff like that. So now, to combine this with the Asian session range, what you're going to be looking for is this. There are two things you're going to be looking for. So if this is our Asian session range, right, and then we have this consolidation in here like this, right? So if they break to the upside, you have to note that them breaking to the upside means they must have created a little higher highs and higher lows in here. Then they break out to the upside, right? So breaking out to this upside, what you're going to be looking for is two things. This is the first one. The first one is you're going to look for them to pull back like this, right? To pull back and then take out liquidity. This is the sign that they took out liquidity, breaking out of that area and then entering back inside there. So this signifies that they just took out liquidity. It's called a liquidity hunt, right, at the highs. So now what you're looking for is, you're going to wait for them to break this structure. So this could be in the form of an M formation, and it could also just be like a pullback and stuff. But you wait for them to break structure, and when they break the structure like this, right, what you're going to be expecting is you're going to draw your order block, and then you're going to wait for them to go back to that order block and then reverse from there, right? And if you look at this, you can see that this whole cycle, like I explained in my previous videos, is the same structure, where you have your consolidation, you have your breakouts, you have your M formation, and then you drop, right? So this is the same structure. This is the same structure. Now, the second type you're going to be looking for is you have your Asian session range and you have your consolidation in here, up, down, up, down, up, down. But now what happens here is they're going to break out like this and then break back down, right? So instead of breaking all the way up like this structure requires like a mini uptrend in here in the first leg, right? So you have a mini structure uptrend in here, but this one doesn't have an uptrend, right? This one, they just slightly broke the highs, but you see that there's liquidity here and there's liquidity here, right? So you'll form this high at the Asian range and then they'll come back down and break that high just a little bit. So this is the liquidity hunt, right? Just took out liquidity and then they'll come back and break structure. Once they break the structure, you're gonna draw your order block in here like this. So when you draw your order block like that, you're gonna expect the market to come back to that order block and then reverse from there, right? So you're gonna be entering sales inside this area. You put your stop loss above the highs. That's the safest place you can put your stop loss, and you can go for any risk to reward you want. So these are the two plays you're going to be looking for, either this one or this one. All right, so let me show you guys a couple of examples. But to add one more thing to these structures, sometimes what you're going to get is, let's say you have a downtrend, right? So you have your, oh no, let me use an uptrend in this example since I've been using a downtrend, right? So you have your consolidation in here, right? And then they break down, then give you this structure like this. So liquidity hunts, right? And they break structure and then they come back to your order block in here. Now this we know this is a whole day. This is like a whole day. So this is Asian session, London session in here, and New York inside here, right? But sometimes you see that they won't come back to this order block at that same day. What they will do sometimes is they might go up like this and then begin to consolidate again for the next day. So they will form another Asian range for the next day, right? So now we know that on the next day, let me just delete this. The Asian range for the next day creates another block of liquidity where you have liquidity here and liquidity here. Now, they want to go up. This is an uptrend. They want to go up, right? So if they want to go up, you know that they have to break down. So now, you now have a couple of confluences here. So you have your order block right down here, right? And then you also see that there's liquidity down here. So what they will do is, it should be obvious for you already. They will break down, come to the order block, touch the order block, maybe even give you a W formation in here, and then they'll reverse like this, right? So this is a multi-day structure where it takes about 2 days, and then you can enter something somewhere in here, any type of entry you want to enter. Put your stop loss below the structure, below the highs of the lows of yesterday, the lows of yesterday, and then you can take this up how long you want. All right, so let me show you guys a couple of examples here. All right, so here's an example on GBP AUD. You can see that the market reversed down here, and then we're now in an uptrend, right? Breaking these highs. Now we have this uptrend. What do we have here? We have our Asian session range in here. The Asian session range is the black or gray box, while the two pink boxes are London and New York. So the first one is London, the second one is New York. So now we have this Asian session range. Now what do we have here? We know there's liquidity down here, up here and down here, right? So they did something sneaky here. So what did they do? They formed, so this was the high of the day, this was a lower high, lower low, right? So now what happened? They formed the lower low, and you can see they broke the lower low and entered back inside. So we know that this behavior is a liquidity hunt, right? So they just took out liquidity at the lows, right? So Now we're going to be waiting for them to break structure. So this is the previous structure. Now you can see that they broke the previous structure. Now we can see this Asian session range, but we can see that this is the main consolidation, right? So they consolidate. So there's liquidity up here and liquidity down here. Now, at the same time, they didn't come back to this. They didn't come back to this structure here, right? So they didn't come back to the structure that same day because this happened in New York session. So they went up and then came back the next session. So now we can see they consolidated, created liquidity, and then they came back to this order block. And then you can basically enter, you can put a limit order in here like this and put your stop loss here. Or you could wait for candlestick rejections where you can see that, you can see these candlesticks rejecting in here. And you can see this hammer formation here. So maybe if you're entering on candlestick, you enter on this green candle. So that will be your confirmation. But if you're entering on the limit orders, just put your limits here and then take this up for, if you put your stop loss down here, that'll be a 40 pip stop loss. And then you would have taken this up to, if you held this, you would have gotten like a 1 to 8 risk to reward. But if you held it to the end of the day, that would be like a 1 to 4 risk to reward. If you held it for more than a day, you would have had double of that, right? So here's another example on GBP USD. Now, if you zoom out, you can see this is an uptrend. We had a reversal down here, so we're in an uptrend. All right, it was previously a downtrend, but now we are in an uptrend. Now, what happened here is we can see the Asian session range, right? Liquidity up here, liquidity down here. I'm gonna wait for them to break the liquidity, to take out the liquidity down here. So basically to break below this box. Now we have the break below here, like this. So, and this was the previous high that is set before they broke this low. Now, we see that they broke the low and then they entered back inside immediately, right? So we know that this is our liquidity hunt. So we're going to wait for them to break this high, and we can see they broke the high. Once they broke the high, that's again a confirmation for us to draw our order blocks. And where is our order block? This is our order block right here. This is our order block. All right, so you put your entry maybe in here, or you can put at the middle. So that you can either put it at the top side here, or you can put it at the middle of the candle of the order block, right? Maybe you can put two orders. You can split your order into two, and if you're risking 1%, you can put 0.5% here, 0.5% here, and then you basically enter here and put your stop loss below here like this and take it up, right? So this took some time to move up, but it still eventually went up. So they held it for 2 days. This would be a 1 to 9 risk to reward on this trade, right? So one of the most important thing when trading this pattern is your bias. You need to have a strong bias, right? And I teach how to have a strong bias, not the way they teach you with the higher highs and higher lows. The way it works is, yeah, the market gives you 3 simple levels, 1, 2, 3, and after this you can reverse, right? So if you're in here, you're going to be looking for buys, and then once they reverse, you're going to be looking for sells. So that's how I get my bias, right? I explained that in one of my videos, so I'm going to put that on the screen. So click the video on your screen to learn about how to have a bias and how to trade this pattern.